It's Friday, Ion Franchising, and I'm your host, Lance Graulich. I have Ted Patestos, Tiger Adjusters. We're going to call him Tiger Ted. I think I love that name.
Up next,
You've been quite successful early on launching this franchise system in different broker networks.
I think the short answer is it's a combination of luck, persistence, bringing the right team around me, and then just focusing on that niche, right? Identifying that gap in a market. Yeah, no, 100%. You hit the nail on the head there, Lance. It's got nothing to do with cracking your back. So, Lance, I'm going to make a big kind of public announcement for the first time here on Ion Franchising.
This episode sponsored by SEO Samba. Empower your franchise with predictable results and AI-driven marketing. Ted, welcome to the show.
Lance, thanks so much for having me on. I appreciate the time today.
So, Mr. Tiger Ted, I have to ask, how did you go from zero to dominating an industry that so many people have never even heard of?
You know, I think it's an interesting backstory. I don't go too deep into the minutia, but I think the short answer is it's a combination of luck, persistence, bringing the right team around me, and then just focusing on that niche, right? Identifying that gap in a market.
Well, let's roll right into that gap. So I have some notes here in my cheat sheet because this is a fun industry. A lot of money to be made. What gap in the market does Tiger Adjusters actually fill? And why has no one franchised a public adjusting company before now? And obviously explain, public adjusting has nothing to do with chiropractic back cracking in public, okay?
That's correct. Yeah, no, 100%. You hit the nail on the head there, Lance. It's got nothing to do with cracking your back. So look, at the highest level, public adjusters represent policyholders, whether they're commercial or residential, and they represent those individuals or those companies as advocates when they're going through the insurance claims process. And so we interact or engage with the insurance companies to ensure that that policyholder is getting what they're supposed to be getting. Unfortunately, especially over the last 10 years or so, for a variety of reasons, insurance carrier tactics have started to manifest and really disenfranchised, if you will, the consumer and kind of undercut what they're really owed. And so it's become an exacerbated problem, and that's opened up a real market opportunity.
So I have to ask, what was the craziest claim that you've ever seen, and how much did you get for your client?
So one in particular comes to mind. We did a claim, it was in rural Pennsylvania, and it was a $20 to $25 million marijuana grow facility. Now, Lance, it fully regulated. You know, we weren't out there. It was insured, super modernized facility. But there was a bulb in one of the grow rooms that had a manufacturer's defect, and there's negative pressure in those grow rooms, which I actually learned when we did the claim. And so it smoked out their entire crop in that grow room. Ended up being a multi-million-dollar business interruption claim. So they had the loss of the product, which were massive marijuana plants, and then because of the claim investigation timelines, they ended up missing multiple rotations of that crop, and so all of the profit associated with those marijuana plants and everything that comes out of that was covered by insurance.
That's amazing. And just for the record, this had nothing to do with any cartel in particular.
You know, I'm not here to question who gets insurance and who doesn't. I'm just kidding. Yeah, no, 100% above board, highly regulated space. And so it was a really great opportunity for us.
So that's a great example, though. How did they end up finding you, Tiger Adjusters, and I think a franchisee in Pennsylvania might have handled that one, I'm going to guess.
That is correct, yeah.
And because otherwise, what? They're on their own to fight their own battles with the insurance company. Good luck. You're not really going to get shit from them.
So, I mean, in that particular instance, they found themselves in a situation where the insurance carrier was taking a position that the claim was denied. There's some complexity there because it was such a large claim, but the long and the short of it is it boiled down to language in the policy that required that the policyholder have smoke detectors physically in the room. And so the challenge was that they had invested like hundreds and hundreds of thousands of dollars into a system that was more accurate, more comprehensive than kind of what you would find in your normal residential kitchen. But the definition of what a smoke detector was at question. And so they had some challenges. They would have otherwise not gotten anything on that claim, and so they needed a public adjuster to really get involved. How they found us was through word of mouth. Our Philadelphia operator had done some work for a commercial property owner that was an investor in this business, and that's how they got connected.
Amazing. And what was the claim? What'd they get?
A little over $2.3 million.
From what they might have thought would have been nothing.
That is correct. Yeah.
Insane. So talk about all the advanced training. Anybody listening that's looking for their first business or even their second business, they want to know, what is that training like? What do I learn from Tiger Ted over here? So you have all kinds of advanced training, AI, augmented reality. Talk about what you do with franchisees with that.
So Lance, I'm going to make a big kind of public announcement for the first time here on Ion Franchising. So at Tiger Adjusters, we are now under contract for our first training, our live training facility. So what we're doing here is we're trying to get from having the sort of the best training from a public adjusting industry standpoint, and we want to take it a step further. We want to get to exceptional, right? So it's not good enough to just be good or great. We need to be exceptional. That's the obligation and commitment we have and make with our franchisees. And so we're investing in a training facility. And the way that we're setting that up, there's some technology involved. I'm not going to talk about it because we're actually in the process of filing a provisional patent. We're super pumped about that, and we think that that's great for the franchise system and the brand overall in terms of general value. But high level, we needed to bridge the gap between our exceptional learning management system training modules that were proprietary and built out. It's over 30 hours of online training modules that we have. We also have someone that fills a role called the claims coach, and they work with our franchisees on an individual basis when they're signing insurance claims for sort of tactical quarterbacking, turning those claims into actual paid claims. So all of those are great things, right? And they're valuable to franchisees for ramp up. But I don't know that we have come across anything more valuable than bringing in cohorts of franchisees to work with one another, build that camaraderie, get a feeling for that they're part of a larger organization, and then go through individual damage assessments. So think kitchen fire live in the kitchen, right? Water damage in the living room, so on and so forth. Instructor-led, again, with some tech that I'm not going to get into today, woven in there to give an exceptional franchisee training experience.
Yeah, that's amazing, and that's why people get into a franchise. People ask me all the time, well, can't I do this all by myself? Absolutely. You could do exactly what Tiger Adjusters is doing on your own, and 20 years from now, you might get up to the volume of an average franchisee.
Yeah, I think that's true of most service spaces, right? It's tough. But you know what I tell folks is, you're 100% right, Lance. Like, you can go out and you can start a business, and you don't have to be part of a franchise system. And you can probably be successful, right? You're gonna learn things along the way. You're not gonna have the benefit of mistakes that were made on your behalf. You're not gonna have that network support, that training, those replicatable processes. You're gonna have some challenges scaling. That's true of most service verticals. When you come into a franchise system, there's an actual contract, but there's also a social contract. And I think that social contract between the franchisor and the franchisee is really centered around value add, right? You're paying a royalty as a franchisee. Is the franchisor setting you up for success, or are they setting you up to get bled, right? And so when you look at the business fundamentals of the opportunity, they have to make sense. But beyond just the business fundamentals, the question shouldn't be, could I do well with this franchise? The question should really be is, what's the value I'm getting from the franchisor?
Yes.
So we're really focused on that at Tiger Adjusters. We take it incredibly seriously. Probably the thing that we take most seriously. And I've been told I'm a little intense about it, but I think that's kind of my job,
Absolutely. I love that, though. So obviously, I say obvious, maybe not as obvious to the audience. You've been quite successful early on launching this franchise system in different broker networks, including ours at FranServe. And I would love to hear your thoughts on how did you get so successful that you're signing deals. I mean, look, the riches are in the niches, and people are recognizing that this is a hot business. But I want to hear your take on that.
I think that when the product is strong, that I'm not going to say it completely sells itself. You've got to engage with folks. You've got to be able to communicate the value proposition. But when the fundamentals are strong and the offering is strong, I think that to candidates, it really starts to resonate when candidates are going through the process. Lance, you know this better than most. They're looking at multiple brands, okay? And at the end of the day, they're going to look at what do the numbers look like? Do I think I can do this? Do I believe in the numbers? Do I believe in the value proposition? What is the market? Is it saturated? As the first public adjusting franchise, in the nation, we're not a saturated market. I mean, we're a true fragmented industry, and we're the only participators in the franchise space, at least in the moment. And so, when we talk about with candidates market saturation, it's just a non-starter. There's maybe 9 or 10 restoration brands that are out there. A lot of them are phenomenal. We work with a lot of them because they're synergistic. But it's a tougher sell if you're talking about from a broker's perspective. And I think the other thing, Lance, is that we're really big on transparency, right? When we're having conversations with candidates, look, our FDD has an item 19 in it, but we use P&Ls and they're cash basis, right? Like you can have an item 19 and then we can all pretend, I'm going to get a little candid with you here today on Ion Franchise. We can all pretend that item 19 is telling that candidate real information. But most brokers know that if you're running accrual numbers in your item 19, if you're not including true P&L statements, you're using kind of average ticket prices or pro forma numbers or whatever people are doing these days. Listen, I can appreciate the effort, but I think that's falling short of what your candidates really want to see.
Yeah, absolutely. Good point. So let's talk about who you're actually looking for and who will make a great franchisee. I mean, look, you already have some dynamite franchisees in the system, but what is it you're looking for?
So what I tell folks is you don't need prior insurance experience to do well at Tiger Adjusters. You don't need to be a contractor or having a background in construction or anything along those lines. That's what the system is for. That's what we're here to teach. That's what we can get you ramped up to be a great operator at Tiger Adjusters. What we look for fundamentally are things that we can't teach, right? I want people that come with integrity. We work in a business that not every insurance claim that we work is a tragedy, right? Not everybody's displaced, not everybody's house burned down. Sometimes it's just a roof replacement, things of that nature. But I think that the big thing is that sometimes we're engaging with consumers, and those folks are wholly dependent on us, right? And to the extent that if we don't do what we're supposed to do, if we don't work that claim with empathy and understanding of what that individual is going through at the time, it's a real disservice to the consumer. It's a disservice to the brand. And so, empathy and integrity are probably the most important, character traits that we look for in our operators.
Yeah. So I love to always talk about, show me the money. So you mentioned the item 19, and I'll just share with the audience that, look, if you do some simple math, Tiger Ted mentioned a claim that yielded $2.5 million, and I happen to know a little bit of something about public adjusting. You're obviously going to get a percentage of that deal, and shoot, even if it was 10% of that, the franchisee would have gotten $250,000. But maybe it's less than that. But shit, this investment in Tiger Adjusters, Ted, is how much? And then go right into the item 19.
Yeah, so our FDD or our item 7 rather has the investment range. Now the range in the item 7 is a little over $43,000 all the way up to $159,000 on a per territory basis. What I tell folks is the devil's in the details. So because of compliance reasons, which of course we abide by. You know, there are certain line items in that investment range that are optional, right? So, for example, we don't require you to buy a new vehicle and wrap it and things like that. We're a home-based offering. You have the option to buy a vehicle. You have the option to get yourself an office. And so those optional expenses are included in that investment range. And so you can kind of do the math for that on yourself when you get into the FDD. But it's a significantly or relatively low investment, I think, when you compare it with a lot of other franchise offerings. Low, kind of low barrier to entry. When we talk about numbers in the item 19, as I mentioned, we do cash basis numbers, and I'm going to use Philadelphia as an example because their first full year in business was 2024. Okay, they started in the back end of 2023, about 2 months there towards the end of the year. First full year in business, 2024, which is what's contained in the item 19. Cash basis numbers, Lance. They did just over $861,000 in fees collected, right? Now, after expenses and royalties, they ended up at just over $655,000 net income on that, okay? Now, in fairness, there were some add backs. I think the operator maybe took 2 or 3 international trips. So, I'll just put the asterisk on that. But, that's certainly not a requirement of the offering.
Yeah. Pretty amazing numbers, Ted. I appreciate you sharing that.
For
sure.
So
when it comes to, share some wisdom with the audience, because look, you're a smart guy. You're finally seeing the fruits of your labor, so to speak. You're exploding. You're going to talk to people every day about joining Tiger Adjusters. Share a piece of wisdom for especially first-time entrepreneurs, business owners.
Focus on the fundamentals. How much is your overhead? What happens if you have a down month? What is the minimum amount that you need to wake up in the morning and to float the business? When I started this business in 2020, okay, I'm going to be clear with you, Lance. Like, I don't come for money, okay? I started my business with $7,000 in my savings. I would have never qualified to buy any franchise to my knowledge, all right? And so what I will tell you is that when you start any business, in my opinion, when you start a business, your fixed expenses have to stay low. That's my biggest thing. So when I look at a business, I look at what is my monthly overhead in terms of fixed expenses, what's my cost of acquisition for customers, and what are my ticket prices. If I'm not dealing with a multi-$1,000 ticket price and a super low average cost of acquisition for a customer and with low fixed expenses, I'm not interested.
Wonderful. Ted, I appreciate you being here and sharing your story. Tiger Adjusters is a brand on the launch pad. So Tiger Ted, thanks for being here.
Lance, thanks so much for the time, and I really appreciate it.
My pleasure.
If you're ready to talk about franchise opportunities, hit the link below to schedule a call. My services are free, and don't forget to like, comment, and subscribe. Thanks for listening.